The cryptocurrency market saw $350 billion wiped off its value over just the past weekend as global investors decided to drop risky speculative assets acquired during the pandemic. Let me give you the details on what's happening. Starting with Bitcoin, which has lost almost a quarter of its value this year alone. The price of Bitcoin has fallen from its November highs of nearly $70,000 to now around $35,000. On Saturday, Bitcoin, the world's largest cryptocurrency by market value, had fallen around 9% in just 24 hours. Since the start of the year, it has fallen around 23%. Meanwhile, Ethereum, the second largest cryptocurrency, fared even worse, dropping around 15% over 24 hours and roughly 35% since the new year. And Ether plunged to as low as $2,176, its lowest since July. And there is an explanation for what's going on, and it has to do with something that Russia is considering, something very similar to what China has already implemented. Regulations on cryptocurrency, which turns out that that's possible. This decentralized, way of this decentralized currency apparently can be regulated. Russia's central bank issued a harsh report on cryptocurrencies, including a potential ban on mining and trading. Russia accounts for about 10% of global Bitcoin mining capacity, making it a major hub for processing transactions on the network. Russia's central bank said cryptos were being used for illegal activities and posed risks to financial stability and monetary policies. So Francesca, I wanted to bring you in to comment on this because again, there's been this long held notion that cryptocurrency is just so much better than the currencies we're used to. It's decentralized, governments can't regulate it. China has already done so, which led to some of the richest people in China losing a third of their wealth, and now it seems like Russia is considering something similar.
Well, yeah, I mean, the idea that any kind of monetary regulation or that regulation of a currency is bad is a flawed understanding of how finance works. And let's be real, do not have a full grasp, but I do know that many countries would have toppled over and over and over and gone into the dumps, including our own, had their currencies not been regulated, had federal governments, had the feds not deliberately and specifically worked so that all of our life savings wouldn't just disappear every 2 years because the country we were mining our cloud-based currency in decided that they didn't want to do that no more. You know what I mean? There are reasons for some regulations. And the other thing I'll say is the promise of cryptocurrency was that it was in fact cloud-based, that it was peer-to-peer, that no one was interfering and that it was of the future. Guess what? It relies on electricity and fossil fuels in order to even mine Bitcoin. So Kazakhstan, which has received a lot of what when China decided to create regulations, Kazakhstan came in, 18% of Bitcoin is mined in Kazakhstan. Guess what? They've got crazy turmoil in that country over the price of electricity right now. There's social unrest. They cut off the internet to that country. And not unrelatedly, there's the Bitcoin problem. So this idea that it's from the future, it's the great equalizer, nah, bro, you just got in on the ground floor and you're excited about it. So honestly, to everyone who's got a partner in crypto tonight, it's gonna be rough, guys. Turn on a favorite movie. Get out some slipper socks or something.
Ooh, slipper socks.
I don't know.
I love me some slipper socks. No, you're absolutely right about that. And it is also interesting to see how cryptocurrency is losing its value along with how the stock market is performing. Because the thought has always been that cryptocurrency is kind of separate from all of that, but that's obviously not true. Cryptocurrencies are moving in tandem with stocks, which by the way have been overinflated for reasons I've explained before, but I'll get into it again a little later, which have continued to fall since the beginning of the year and just came off their worst week since March of 2020. Investors have been selling risky assets like technology stocks as they prepare for tighter monetary policy from the US Federal Reserve. So we all know that the stock market is experiencing a bubble, has been experiencing a bubble. We all know that, right? So you have cheap money being provided by the Federal Reserve. That money doesn't end up trickling down to ordinary people or small businesses. Corporations and banks have used that money to engage in stock buybacks, thus artificially inflating the value of their shares. I mean, the market is definitely experiencing a significant dip right now. But that was to be expected. I'm surprised that the economy hasn't completely crashed as a result of what the Federal Reserve has engaged in, not just under the leadership of Jerome Powell, but this has been going on since the Obama administration. And so the only real purpose for the Federal Reserve, we've been told, has been to control inflation. But the Federal Reserve has actually engaged in significantly increasing inflation, certainly when it comes to the value of assets, the value of stocks, the value of real estate. And we're gonna see I think we're starting to see the consequences of that, but I don't know the extent of it just yet. Sometimes the Federal Reserve will tighten monetary policy and then they'll see the ramifications of that in the economy. They'll get scared and then they'll go back to the same monetary policy that inflates asset values. But cryptocurrency apparently not separate from all of that. We're seeing this all kind of happen in tandem with the value of cryptos declining. Investors now forecast the Fed, the world's most influential central bank, will raise interest rates 3 to 4 times this year, something that has sent bond yields surging. Higher yields on low risk assets like government bonds make the potential returns that can be earned through speculative investments like cryptocurrencies look less appealing, analysts say. And that's certainly reflected in what we're seeing today with cryptocurrencies. Let's take a look at that map from CNBC.
Beautiful.
Beautiful, yeah.
That's stability, freedom right there, you know? And it's funny because, I mean, the United States, like as much as you're saying that the feds, yeah, they work in favor of people with stocks and money, right? As you pointed out. But at the same time, it doesn't behoove them to allow all of us to just sort of plummet and fall into poverty willy-nilly like that. That's why we're not switching all the way to crypto right now. But places like El Salvador are now introducing cryptocurrency as like one of their main forms of currency. I mean, these are places, and even again, like places like Kazakhstan or even Russia, you know, all do, but like not everyone has the power of the Federal Reserve, US Federal Reserve behind them, right? And a lot of other countries understand what happens when you peg your currency to like the dollar, for example. You know what I mean? That is volatile as well for other countries. Bitcoin's not the answer to that, but it's almost like we're understanding what it's like to be like a country in the global south if you pin everything to like an unstable currency, you know?
Right.
Or a currency that you don't actually normally deal with, or because you don't actually buy and sell goods with it. It's just a form of hoarding. It's just a mattress. It's not actually productive in any way, also, like the dollar is.
Let me just, you brought up El Salvador. What about individuals living in El Salvador who don't have access to the internet, don't use the internet, elderly people who, you know what I'm saying? Like, it's just this move towards something that has been marketed as democratizing the financial system, while also by design leaving large populations of people out of it because of the lack of accessibility. So all of this is something that you should consider, especially when you hear the marketing around cryptocurrency. And honestly, the value for crypto is really reliant on the annoying marketing that you see online, right? The Elon Musks who basically inflate the value of crypto just from a single tweet. That marketing is what increases its value. It's not due to anything really substantive, and that's another thing that people should keep in mind.
Thanks for watching The Young Turks, really appreciate it. Another way to show support is through YouTube memberships. You'll get to interact with us more. There's live chat emojis, badges. You've got emojis of me, Anna, John, JR, so those are super fun. But you also get playback of our exclusive member-only shows and specials right after they air. So all of that, all you gotta do is click that join button right underneath the video. Thank you.